In this video, we're going to talk about how we can use price action rules to help us identify directional buys to the market and where are the high probability setups. We're looking at S&P 500 and mini futures. The time frame is 2000 tick chart. As you can see, the structure right now is indicating consolidation. We have some uptrend with massive overshoot. The overshoot was so significant that it's very likely that the market may reverse. And you can see we have such a long consolidation. We're basically so far from the initial trend. We're not expecting new high. We're focusing on the most recent structure. So I'm going to zoom in and I'm going to focus on the candlesticks in front of me because I want to identify exactly what is happening. We have some lower highs in this trend range and we have prices breaking lower. Most breakouts out of trend ranges fail, at least temporarily. So we can see we broke. This is the breakout, pullback, and this support is now acting as a resistance and prices continue to go lower. So this is now a good sign. Okay, there is a bearish structure. Why? Well, because if there is no bearish trend, this breakout is going to succeed and you're going to go back into this consolidation. The fact that this is a breakout pullback pattern and you continue to trend lower is a good sign that there is right now bearish structure. So I can right now look for some channel. So I like drawing channel like this because you can see I get confirmation here. I'm going to copy it. We're at the bottom, two things at the bottom. So this fits pretty well. And as a price action trader, I always want to have channel on a chart so I understand exactly where the market is heading. So I can see lower highs, I can see the key entry point. Let's see what's going to happen. I'm going to redraw the short-term uptrend working higher because there's always a correction part of the main channel. We have a spike, break, new high. So our trend played out and now we have second entry short, breakout, pullback. Now I'm not going to mark it because this happens super quickly. It doesn't seem like that in hindsight, but when you're watching this live, there was a massive spike in volatility. There was a quick break, new high, and push down. So you can see our trend played out. Market moves in pairs of twos. And this is important clue because you're pushing strongly below EMA. This is also, once again, breakout pullback where the key level is holding. And I expect new low according to trendline rule. This is why we're drawing these channels so I can predict what's going to happen. So I expect prices to go lower, test the new low. We're below EMA. So I want to see a lower high confirmation setup. And now we have a lower high confirmation setup of the second entry short. And of the fact that the downtrend needs to get new low. This is double bar entry because you cannot go short below this bullish bar. So you can enter below this bearish bar. This is a great double bar entry because it's so close to the previous bar. Basically only one tick difference. So this is a great lower high confirmation setup using the double bar entry. And you can see you're at the EMA, you're at the trend line. And this is great high probability setup because we're confirming the second entry short. We expect new low. And market created break, push to new extreme. So downtrend played out. So right now I'm going to pause looking to go short temporarily because downtrend played out. Let's see what's going to happen. Let's see what is the next market cycle. Once again, I'm just using the candlesticks and reading the pure price, the raw price action. It's going to tell me everything I need to know. So right now we broke lower and this is telling me, okay, there is no reversal because we can't even stay above EMA. Instant push down. So, okay, the buyers are not as strong. The market is still quite bearish, but let's see what's going to happen. We're breaking higher, so I'm going to redraw the short-term uptrend like this, respecting the correction. We have a break, push to new high, no long setup, no nothing. And we have massive spike back below EMA. Okay, so because I can see that this uptrend didn't last a long time, you have a break in new high again, and you have significant spike below EMA. It resembles a little bit what happened here. So when I'm going to really zoom out, I can see that, hold on, is there some bigger channel, something like this? Because I'm still getting confirmations here. You can see price action is still reacting here. It fits on a higher time frame. So I kind of like drawing this channel now because after breaking new low, you created push down. Now you have a break in new high, no reversal, and another significant push down. So this secondary wider channel fits pretty well. But because it is a secondary channel right after our first one, I don't like taking lower high just yet. You have a lower high here. It was horrible bar and double bar entry is too big. But even with a good signal bar, it feels a little bit too early because we just adapted to a new channel. So in a situation like this, when I'm thinking, hold on, there can be a wider channel. I prefer some filled second entry long or second entry short. Just something a little bit stronger than just plain lower high. Because what if this channel is not going to be valid? It ended up being valid because lower high worked. So this channel has to be valid. Actually, I'm going to adjust it because I drew my channel live a little bit tighter like this. Break new extreme because I get better confirmations. As you can see, I want to have the price action fit nicely inside of the channel. It still gets me to the same place. I have a break and I expect new low to be tested. Okay, so I'm going to redraw the short-term uptrend like this. I have a new low, first entry short, pullback, second entry short. Of course, I cannot take a second entry short, but now I have tick higher, reversal down, and I have a lower high confirmation setup, confirming the second entry short, confirming the fact that the downtrend needs to get new extreme, and this is decent high probability setup, lower high confirmation setup. We're below EMA. Can we get the new low? Not fully, so we still expect prices to test the new low. So I'm thinking about second entry short at the EMA, but we broke higher. So we have some pullback to the upside. No second entry short, no nothing, and downtrend play with the break and the new extreme. So once again, I'm going to pause looking to go short. That doesn't mean I can buy, okay? I'm not buying bottom randomly, okay? I need at minimum failed second entry short above EMA, preferably some proven uptrend, okay? Because we traded down and bottom pickers will get trapped. So after breaking new extreme, I'm taking note of the fact that, hold on, we can't even correct. We keep going lower. So this is quite significant, and market trended down again. So at this point, I zoomed out again, and this is very similar to what we talked about a few days ago, where after breaking new extreme, the structure still looks bearish. Overall, the trend down still looks fairly structured. And if I'm going to widen the channel even a little bit like this, I get confirmation here, something here, something here. So once again, even a little bit wider channel makes sense. And once again, take a look at 10,000 tick chart, higher time frame. It can help you to analyze exactly what is the pattern. So you can see the trend still looks structured, no empty room, consistent series of low highs and low lows. So I can definitely right now focus even on slightly wider channel. Okay, so I'm going to redraw the short-term uptrend. Second entry short below EMA would be okay. I have a break in new high, uptrend played out. Push below EMA, so I want to see a lower high confirmation setup. No lower high. Actually, we have a lower high here, but it's not full at the EMA, and the signal bar is quite doji-ish. So not a great setup here. It's not full at the EMA, can't take it. And now we have overshoot of the trend channel line, which once again, I can understand exactly what's happening based on pure price action alone. I don't need any other indicator, no other tool, just reading the candles, reading the market geometry, and understand that there's a push phase and correction phase, and this push phase is too overextended. So after overshoot, I'm going to skip the pullback to the EMA. There's going to be a second entry short. I'm going to skip it, okay? Because overshoot can generate stronger pullback in the opposite direction. It can even reverse the market. So I'm not selling here. This is important because as a beginner trader, you may be afraid to enter short when the trend is developing and you see market going lower the entire time, and now you want to go short at the very bottom of the overshoot when everybody's going to take profits. It's too overextended. Wait your turn. This is overshoot. I'm skipping all short setups right now. Market keeps going higher, so I'm going to redraw wider uptrend like this. Initially, I was still expecting prices to eventually test the new low for this downtrend. Okay, that's the default thinking, expecting new low to be tested. But as the market continues to print more bars, I'm proving otherwise. I can see that the uptrend looks very strong, very healthy, and very structured. And you can see it doesn't look at all like we may eventually test the new low. Now I have a break, push to a new high. Let's see what's going to happen. This was pretty much the last time I was thinking about potential new low. You have a second entry long here, but we can't really take it because it pushed below EMA. You just have a break in new high. What if we're going to spike down and test the new low? And notice what happened. Market continued to go higher. So when I saw this, I was like, okay, this uptrend is too clean. It's too structured. The retracement is too long for me to expect right now market to test the new extreme. And this can happen after overshoot sometimes. So you can see how steep this looks. Healthy, structured uptrend. So what I like doing, I like widening the channel just a little bit. You can see I still get a lot of confirmations. I still get all the confirmations here. So this is definitely a solid channel, something like this. I'm going to draw a channel like this, copy at the top. So bias is bullish. I'm forgetting about new low. We reversed. It's going to happen after overshoot. And I'm looking for second entry long at the EMA because market moves in pairs of twos. First entry long, second entry long at the key entry point, EMA or the trend line. I have only first entry long. Okay, I have a second entry long, new high. First attempt to go long, failed, and now the second attempt to go long. This is where we're gonna go long. The initial signal bar was terrible. I cannot go long above barrier bar. I can use the secondary bar as a double bar entry, and if you're gonna use the secondary bar, this is decent high probability setup, second entry long, because the trend is very, very strong. You can see tiny pullbacks, very healthy angle. This is extremely strong trend, so you have to be a little bit more aggressive. Gonna redraw the downtrend. Okay, I have another second entry long, but you know, at this point you're quite close to these highs. This doesn't feel that great. Also, it didn't form that clean. You know, more advanced trader can consider, more aggressive trader, but to my liking is a little bit squeezed. Once again, double bar entry, but when the trend is strong and you have 2 key entry points, you can consider, but it's a little bit too wedged, a little bit too squeezed. Market continues to go higher, and now we're correcting. So I'm gonna respect the correction. Let's see what's gonna happen. Break, push to new extreme, downtrend played out. We have sort of like a mini counter trend triple test, but we can't go long just yet, and we have massive spike above EMA. So now I'm thinking about second entry long. I want to see second entry long at the EMA because the main uptrend needs new high. Okay, can I get a second entry long, new high, first entry long, pull back? I was looking for something like this for 2 channels needing new high. That never formed, and market broke over. Okay, so the correction is still taking place. I'm going to zoom out so you can see the bias. It is very, very bullish. This is clear, steep, strong, and structured uptrend. So it's very easy to expect new high just following simple price action trend line rule. You have second entry long, 2-legged pullback. The bar is quite big. I don't think we can go long just yet. You prefer to get something above EMA. And now I'm going to a little bit contradict myself because this is interesting. This is triple test. The reason why I want to talk about this is because more advanced trader can understand what happened here. And my intention here is not to cherry pick. Let's say if you consider this long right here, it's not a bad entry. The reason why I'm willing to mark this trade as more advanced compared to this one, because this was already a fairly decent long opportunity. They stopped them all out by a few ticks and then offered better opportunity. And after you gain some experience, you will actually recognize this can happen many times. And this is actually a decent setup to capitalize on a lot of early bulls buying here. They got stopped out just by a few ticks and then it offered a little bit better setup, strong rejection. So if you gain more experience, you will see this happening on the chart quite a lot near the key level. And this is why I'm trying to explain that it's a bit okay to go long here, even though it's better to wait for first second entry above EMA. But more advanced trader can understand because they stop them all out, market go higher, and you can see visually it looks like a 1 leg down, break, second leg down. But if you're an average trader, just wait for the push above EMA. You can never go wrong by waiting for push above EMA. That's the ultimate sign that the buyers are back in the market and the uptrend is gonna get new high. New low, first entry short failure, high low, already quite tempting. Can I get a first second entry short? And now I have a felt second entry short, new low, first entry short, second entry short failure. Great textbook high probability setup. It's inside of the channel at the EMA. Main uptrend is new high, 2-legged pullback down, everything follows the rules. Great setup. I wouldn't really call this high low because we already moved quite a lot from the first second entry short. You prefer this high low to be a little bit closer. Once again, not a bad setup if you took it, but at this point I kind of prefer second entry more than single high low, but it's okay setup enough. Break a new high and uptrend played out. Perfect price action. Spike, brought 2 legs down, push to new high. So now we can pause looking to go long. We can expect correction or reversal. We have reversal down, but there is no good setup. We have felt second entry long, but look at the tail. You can't really sell below this bar. You get some lower high. You know, these are not terrible setups, but a little bit congested. Once again, I'm not going to mark them, but if you took one of those setups, you know, more advanced trader can consider. It's not a bad setup because you have the context on your side. At this point, the trend range is established. Okay, at this point, I was expecting to test the new low. We didn't fully test it, and market reversed strong above EMA. You can see how prices are working higher. At this point, we have a second entry long, but I don't think we can go long just yet. It's not fully at the EMA, but more importantly, it looks like a one leg up break, second leg up. I was kind of worried. What if there's going to be some follow through for this leg down? Okay, but you can see in trading ranges, especially if you traded up into this trading range, which we did, the buyer stepped in, attempt for new low is enough. And right now I'm going to redraw a brand new spike and a channel pattern because support held, sellers gave up. That's common in trading ranges. There may not be every single time fully new extreme, especially if you trade it up. So at this point the bias is bullish and I want to see second entry long. Can I get a second entry long? No, I have overshoot and I have overshoot at the top of the trading range. So I have to be extra careful because you can expect stronger correction due to overshoot and due to top of the trading range. So I'm combining two price action rules, overshoot and a resistance bounce. The short-term channel is in play anyway, so of course I cannot go long below EMA. Okay, we're back below, so I cannot go long below EMA. At the same time, I don't think I can go short. You have some visual second entry short, but it looks like breaking new low. It looks like the downtrend played out. I don't think I can go short just yet. What if there's going to be attempt for a new high? Conflicting area, okay, because it's too bearish to go long. We're below EMA, but it looks like two legs down. And there is potential for new high, so when you have conflicting variables, you gotta be careful. And because market is now back below the middle of the trend range, and you're getting so far from this initial uptrend, overshoot will reverse the market because overshoot can generate stronger correction in the opposite direction, combined with the resistance bounce. Okay, so we're not expecting new high because the retracement is so deep. You can see you retraced the majority of the uptrend, and you are in a trend range. So once again, in these ranges, it's okay for channel rule to not fully play out completely because in ranges near the extremes, the buyers or sellers will step in. So now I'm safe to be drawing wider channel. Okay, I can actually get a little bit wider channel and still get the fit here. Have a new low first entry short, pull back second entry short. But we're above EMA though. Can I get a lower high confirmation setup? I have a lower high confirmation setup. The signal bar is not the best. There's a tail at the bottom. It's not a horrible tail. Now the context is clear. The downtrend needs to get new extreme. It's actually a decent setup. Even with the tail is not that bad. The bar is okay-ish. I'm gonna mark it. It's okay enough. Lower high confirmation of the second entry short. Uptrend played out. Downtrend is new low. Decent lower high confirmation setup. Breaking new extreme. And now the market is about to close and traders are taking profits. So this is the overall structure for today. Fairly decent price action, downtrend working lower, couple setups on the way down, overshoot into reversal, breaking new high into consolidation. Perfect price action when it comes to structure and several good decent high probability setups. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.